Okay, beautiful, and welcome guys. Welcome to our New York Stock Exchange open trading session. As always, man, I absolutely love these live sessions. Yeah, it's just something that I really love to do. So welcome from wherever in the world you are joining us. Kindly let me know how the stream is going, audio and quality, as well as where in the world you are joining us from. That is super important. I love to hear from you guys in the chat, and as always, engage and let me know what it is you're looking at and what it is that you are seeing. So I can see there Tumelo, what is happening? Darius, how are you doing, my brother? I can also see Pamela. Welcome, Pamela, from Johannesburg. Beautiful, guys. We're about to have another amazing session. And just a disclaimer, guys, we've had over every single one of our past couple live streams, we've ended the live stream in a profit. And so just understand that that is obviously a great blessing. That is amazing, but that won't always be the case. Markets are going to be especially choppy today. However, we do our best to make sure we take everything we know about the markets and apply it in a safe and calculated manner. So risk management is everything. Unless I didn't say it a little bit earlier, guys, welcome. My name is Dane van der Maas. We're about to have a great bit of fun together over the next couple minutes. We're going to be looking at the New York Stock Exchange open. But before we do that and before we jump into that, guys, please make sure you go ahead and like and subscribe. Now, for those of you who have your live accounts sorted out, we're going to be emailing you over the next couple of hours a link to tonight's session, guys. Tonight's session is going to be massive, right? We're looking at that interest rate decision. It's going to be massive. Doesn't matter where in the world you look right now, no matter which news article you look at, that is going to be the absolute focus of the markets this evening. It's going to move markets in a substantial way. It's going to set trajectory for the dollar as well as indices, commodities, you name it, across the board. And so I'm super excited that we're going to be able to be in a position to cover that, discuss it, and trade it live. So if you're excited about that, let me know. Will you be joining me this evening at 8 o'clock? We will be starting the stream at about 7:45. So just looking at the comments, Gerald, what is happening? Kudzai, Gilbert, Pamela, Nadir, Mliba, welcome guys to the live broadcast. Now let me know, will you be joining me tonight or will you be in bed? I can see we have people all the way from Pretoria, Caldon, Polokwane, as well as Swaziland. So welcome guys to our live stream, to your live stream, because that's exactly what Globex 360 and G360 TV is all about. Okay, so let's jump straight into it. Let's quickly have a touch on the news. I'd like to have a little bit more time today to obviously prepare for the market. So we got good CPI data for the Rand. However, if we have a look at what the world is saying, more than likely that 75 basis point hike is coming tomorrow for the interest rate decision on the South African Rand. So if you have a variable interest rate on your home, on your bond, on your car, on your credit card, it's more than likely going to mean there is going to be an increase on that. All right, and that just adds another reason why there's never been a better time to learn about the Forex and financial markets, and B, participate in it, right? We see economic times across the board are going to get slightly more tight, are going to get slightly more difficult. And this is another way that you can create a income stream and essentially reach some sort of target to either supplement your income or at some point totally replace it, right? So there's never been a better time to be a trader. If you need one more reason, there's definitely going to be cash back, which means real money for every single one of your live trades. Now, just a quick question to the guys in the chat. Welcome, Guwan from Namibia. Guys, do you have your cashback wallet set up? Have you opened your cashback wallet? Are you making money right there? I'm absolutely enjoying it. The one or two trades that I lose, I make up in my cashback wallet, and it's just like, it just doesn't get any better than that, right? So let me know in the chat. A, are you joining me tonight? We will be starting at 7:45. Do you have a live account? And B, do you have your cashback wallet sorted out? Let me know. All right, again, just focusing on that interest rate decision. We're going to get that at 8 o'clock, and then we obviously have the FOMC press conference happening at 8:30. We'll be streaming that live, but obviously we are all here to look at the markets. So without further ado, let's jump in. And as always, we're going to be looking at NASDAQ, German 30 and US 30, and we're going to utilize that in order to try and see if we can catch a breakout on this market and on these structures. So again, in front of me, from the left hand side, we have NASDAQ. In the center, we have German 30, and on the right hand side, we have US 30, otherwise known as Dow Jones. So looking at them individually, we all have these rising market structures. Guys, if you were part of the live trading session this morning, we absolutely killed it, right? That was our buy, our breakout point. And if you held this trade, right, throughout the course of the day, you would have made 2,300 pips. To put that into perspective, if you were making $1 per pip there, $2,300, not bad, right? For a morning worth of trading, and you could just sit back, relax, set your stop losses, and allow it to do its thing. So we are underway into the New York Stock Exchange, and what we're looking for is breaks in structure. And there we go. And I'm busy dragging all of my levels. Let me quickly fix this one. Okay, so again, in anticipation of what could potentially be happening with the interest rate discussions and decisions, if you've watched this morning's video, if you watched yesterday's video, a rising interest rate, as we discussed in the past, has generally resulted in a positive move on indices and a negative move on the dollar. So the fact that markets are starting to wind up, right, we're seeing this little bit of a bull move over the course of today, definitely tells me the market is aware that is highly likely that's going to be the case. So a break to the downside would be unexpected, certainly possible, but unexpected, but it's more than likely we'll get a break to the top side. Now, I don't like to trade breakouts to the top side in a rising market because it means that market's already rising and it could be a false push to the top side or an overextension of that market already. But we can see US 30 is making that push down, which is what I would expect to see in terms of a little bit of fear, a little bit of panic from the markets leading up to this interest rate decision. So we're going to map this one out really quickly. And as always, we're going to allow the markets to tell us what they want to do. And we've got the price action, we've got the structure. I'm mostly, again, going to be focusing on US 30 this afternoon. I've got NASDAQ as a guide, I've got German 30 as a guide, but US 30 is going to be the way. All right, so we're definitely seeing that break and that push to the downside. And so I'm getting into that sell there. I'm very well aware it could be premature as well as a pullback, but I am jumping in with a sell, and I'm immediately going to go start to cover myself from a stop loss perspective and put my stop loss back into market structure. All right, so there's that trade. I'll zoom in quickly for you guys. There we go. So that trade is busy moving. What we want to do here is I'm going to use this afternoon. I'm going to be a little bit more cautious. So I'm going to go in for probably about 1,500 in terms of a trailing stop. And in the event we push 1,500 points, which is around about there, my trailing stop will engage and essentially run with US30 towards the downside. So let's have a look if we engage. And I'm placing my stop loss just back into structure for the reason of if we go into a ranging market, a range, we could range now for the next couple of minutes, but ultimately if we start to go back into structure, that could indicate that, we could get a buy move, and that initial push was essentially just a false move to the downside. In addition to that, the zone we want to obviously cover is going to be that zone over there. So for some sort of sell market structure, I've put it in that feeler trade already. And then what I'm going to do here is I'm just going to add a position there, and then I'm just going to minimize just to watch the rest of the markets in terms of what they want to do. As we've seen over the past couple trading sessions, markets have given us that initial push and then after the fact revealed their final direction. So jumping in a little bit premature on this one, because ideally we'd want sort of market structures to break. I'd ideally like to see German 30 break that low, and obviously on NASDAQ, similar type of thing. We want to see that low being broken over there. So again, with a massive news event, you obviously want to be cautious of the fact that markets are aware of what may potentially end up happening, especially big money. And ultimately that can sometimes result in, essentially a bear trap or a bull trap, right? So meaning big money is aware markets are going to go up long term, and ultimately resulting in markets then deciding that they're going to quickly sweep the floor in terms of taking out those lows and then reversing for a long side move. So again, disclaimer, this afternoon is going to be super high risk, just purely because of the fact that FOMC meeting a little bit later. However, we are going to hold. And again, risk management is everything, right? People often try trade without a stop loss, and that's just purely because of not knowing where to place a stop loss effectively. And that's what we're basically doing this afternoon, is we're just making sure that if we're wrong in a zone that we're aware and don't want to be caught, still holding, a sell up into market structure, and then we can obviously look for a buy and we can recover whatever stop that may end up being, right? So that's the important thing, is you want to be wrong, let's be wrong quickly, and if we're going to be right, we want to obviously be right long term. So that little push up has closed that little trade out there, and what we want to do now is we want to wait for the next decision, right? We've got this massive push to the downside. It's still likely we can make a push, but I'd like to rather be safe than sorry, and so any move below the previous low, I'll re-engage into a sell. The only reason I wouldn't just start adding sells or do what they call order layering is in the event of arranging markets, and that can always happen, especially in the times of indecision. Markets just aren't sure. There's a balance of participants that are bullish, there's a balance of participants that are bearish, and ultimately that causes these swings and these sways in markets. So we're gonna have a look what she wants to do here. Let's just see if we have a little bit more of an indication there. So NASDAQ is not giving away any hints to us. And essentially what we want to do here for a trigger, if we're going to end up adding positions to that short, we want to make sure we break that low that we just made a little bit earlier. So again, it's very likely we can still continue towards the downside. However, I don't like to hold risk unnecessarily. So I'll prepare myself there. And all I'm looking for here as a trigger is I'm looking for NASDAQ as well as German 30 to break that low and then start to run. And that's where I'll jump in on US 30 again to get back into that sell formation. If we fail this support and we start to range and make new highs, again, opposite would apply. We would then start to look for a long buy bias. I'm just quickly going to open up. I'll set an alert here just in case it moves without me seeing it. Let's just do that. And this move is very indicative of indecision, right? US 30, German 30 definitely wants to try and break there. Is struggling. US NASDAQ is struggling there. And US 30 is just currently stuck in a little bit of that range there. And in this case, what we can do is we can essentially look at fib. And, you know, if we break that 88.2 top side, right, it means that that initial impulse is dead, and then we will obviously break structure to the top side. So that is the only time at which Fibonacci is useful in these smaller scalping setups. So you can see there, we failed to break that low, and now we're starting to make a substantial push higher. So we're going to continue to watch that. Yeah, 100%. Pisa saying too much inflation right there. Nzila from Angola, welcome all the way from Angola. Windhoek, Namibia, beautiful. Right, so indecision we can see, and again, that's why, you know, you want to take your time. You want to make sure that market structures break. Just another thing we can do here, just to add to the edge that we already have, is we're going to map out on German 30. So we can see that we just bounced off of that level, and the same story there. So we are looking for, if we get a push up above German 30 back into structure, and just a quick zoom out of what that structure looks like. All right, so German 30, we've got this little bit of a structure happening here. If we get a push back up into that structure, back above that level, essentially higher than the opening or higher than the initial impulse of the New York Stock Exchange open, we'll jump in for a buy. But still, we could still see a sell, right? We could still see markets just taking all this information, putting it together, and then making a decision. I get a lot of questions often from people about, you know, how long does one wait? You know, what is that period look like? And generally speaking, if the New York Stock Exchange opens at 3:30, and remember 3:30 is GMT in terms of GMT +2, but that's daylight savings time in the US. Later on, it's going to switch back to a little bit of an earlier time, but just remember, by 10 to 12 minutes after the fact, whatever that movement is, so if we say it's currently now 20 minutes to 4 o'clock, if by 3:45 there isn't a decision, we don't have direction, that market is going to range. You then need to wait for the 4 o'clock mark and then potentially look for a break. You'll always see that if a New York Stock Exchange is a range, have a look at the charts. You'll see a bit of a range, a bit of volatility, and then at 4 or 5 o'clock in the evening, we get to see that break. But as I said at the start of the show, because of the FOMC meeting this afternoon, I am a little bit more cautious just for the fact that there's a lot of data. There's economists busy saying, you know, the Federal Reserve is driving a vehicle, they're steering a vehicle, but looking out the rearview mirror. And what does that mean? It means that the Federal Reserve has to make policy decisions based on past data. Unemployment, labor market, CPI, all the data that they essentially taking into their consideration for an interest rate is past data. So they're making future decisions based on past events and past data. And so that's quite the script way of explaining it, that the Fed is driving a vehicle forward, but steering it looking out that rearview mirror. So that is obviously something that, you know, causes a lot of changes in opinions. And again, whether we get that 75 basis point hike or an unprecedented 100 basis point hike, that is going to rock the markets this evening. And that will essentially set the tone for the whole week. So if you have your live accounts, the trades we place this evening very well might be the trades that we hold all the way into next week. So if we talk about indices, we're talking about thousands and thousands of pips. So you do not want to miss that. I see that nobody says they're joining from 8 o'clock tonight. So I think then I'm not going to be sending a link. So everybody here is saying they're not joining. Oh, Mliba says they're joining. Okay, so Mliba, I will send you a link if you say you're joining us at 8 o'clock tonight, but nobody else said they're joining. So it'll just be myself and Mliba and some of our other traders that we're going to end up looking at those things. Now Tumaleng says they Tumaleng. Now it's a piece. Now Larry. Now Sanveer. Guys, if you have your live accounts, I'm just kidding about sending individual links. If you have your live account, we will automatically email you over the next couple of hours a link for the meeting and for the live session we're going to be having. And it's going to start at 7:45 this evening. Leon saying he's now joining. Kudzai saying he's now joining. Anthony saying he's joining. Tomelo, apologies for load shedding. Apparently, we're going to stick on stage 5, but it may get slightly worse. Okay, let's get back into the markets really quickly. So, from a fib perspective, we have essentially retraced what looks like, I would say, about 88.2, at least 78.6 of the move down. Let's have a look there. So there we go, 78.6 of the move down we've pulled back to. And so what I would like to see this afternoon then, in order to play it safe, right, is again, I'd like to see German 30 come back up above into structure. Nasdaq is certainly showing that, but for those of you who are going to be following a little bit later and in essence monitoring this market and trading afternoons, so I know a lot of you do, and I do the same thing. I enjoy trading markets in the afternoon. Essentially what you'd want to see is that Nasdaq break above the natural market structure, and the same type of thing sitting on US 30. We'd like to see that break on top of that market structure. So we'll hold the live session a little bit longer. We could be surprised. We could see that move happen. US 30 is definitely showing signs of a slowdown, and you can see we're definitely entering a range. Now, what does this range look like? And this is going to be a question I've mentioned a few times in the past couple shows, and I want to see who grabs it. Whoever answers, the first 5 people to answer correct, I'll be doing a live Zoom with you, personal one-on-one, going through your trading, what it is you need help with, personal mentorship in the course of this week as well as next week. So the first 5 people to answer this live, I'll be spending direct personal time with you one-on-one to answer some of your questions, go through some of your issues, whether it be risk management, whatever it may end up being. But what does this mean? When we get a structure that ranges right to the top side, what is that essentially telling us, and what is the likely event? What is the most likely thing to happen when we have a consolidation or correction that ranges topside? So we'll see who's the first 5 people to answer us really quickly. What ends up happening in most cases? Okay, Gawain says range to the top means drop down. Okay, I'll tell you who's right. So Gawain, you obviously in. Sellers taking over. Tumelo, not necessarily. Break to the downside. Darius saying drop to the downside. Anthony saying it'll break to the downside. Tumelo is technically right, but I would have liked to have seen specifically that we are breaking to the downside. Let's see, we got, right, so we'll add in one more person, the last person to answer. That's going to be the 5th person, and then I will be saving your, enter his glory, worship, excellence, continuation, upwards, no. Itumaleng, there will be a breakdown to the downside or downtrend, correct. So when we see a range, that's what we're expecting. All right, and so when a range happens, it's important not to get too happy to trade within that range, right? Once a range happens, what it's telling us is that markets are trying to consolidate. They're trying to just figure out what just happened, right? And that's where the indecision comes from, in the sense that, you know, markets are trying to figure out. We can see it's very clearly not an impulse, right? If we just zoom in here on US 30 and just make that a bit bigger, we can very clearly see that is not an impulse, and we're not getting an impulse to the top side. We're getting a correction. Markets are trying to understand what is busy happening, you know, in this particular structure. So I will be sending out, I will make contact with Tumela, Anthony, Darius, as well as Itumaleng, as well as Gawain. Is it Guvan or Gawain? I feel like it's Guvan. Is this Guvan? I think it's Guvan, right? So I'll get in contact with you guys after the fact. We'll be doing a Zoom call, and we'll go over what it is that your biggest pain points are and how we solve that. To be so almost just too late. Melisi also just too late. But yes. Okay, so let's have a look what is busy happening. Again, we're still getting that range. We're still getting that consolidation. Let's see what we end up getting here from a data perspective. Let's have a look. Let's have a look. Let's have a look. Okay. And just remember, guys, for those of you who obviously do have variable interest rates, please remember tomorrow is going to be of importance to you, for the reason being that we obviously have that interest rate decision for the South African rand, right? The expectation is that the base interest rate will go up by 75 basis points, so 0.75%. And generally that's a knock-on effect for anybody that has a variable interest rate. So if your home loan, if your car, if your credit card, any of those items are sitting in a variable interest rate environment, please obviously make sure that Guane says the first pronunciation. Okay, brilliant. Please make sure that you are aware you may be in for a little bit of a surprise at the end of the month, but you'll get letters from your finance house, from your bank, that will essentially communicate that interest rate decision. I want to point that out. Okay, so listen, we're getting that volume to the top side. I'm liking this. I'm really liking this. Okay, so again, let's get into this. Okay, now we're starting to see that volume. Now we're seeing markets start to show their true direction in terms of where they're wanting to go. And what we're going to do here is we're going to hold essentially a long position, right? So we're going to hold a long position, and we're essentially just going to put our stop losses back into structure. We're not in a range anymore, right? And markets have given their true position a little bit later than we normally expect, but I've anticipated that markets are just obviously in a space of indecision. So on US 30, what you can do is go to a 15-minute time frame. What we want to do is we want to map out this market structure, and you can see here we've obviously got this little bit of a channel that's happening. And what you want to do is you want to make sure that this channel represents let's just quickly map that out a little bit better. It's hiding behind my candlestick. You want to make sure this channel represents your market structure, right? So if we go back into market structure, which we very well might do on a crazy day like this, then obviously you want to get out of that, and then you want to wait for FOMC. You don't want to hold on to that for too long, right? So we're going to wait to see what that push looks like, but I'm going to end up holding this. And what I'm going to do, because I want to hold this long term, and I do think markets are going to anticipate a longer move, I'm going to play it safe. I'm going to play it just and put my stop loss below the last support. Now that is a big stop loss, but I would like to hold this long term. So I'm going in for a couple hundred pips in terms of a stop. And then what I'm also going to do is I'm going to set up some trailing stops by right clicking, going trailing stop, and setting up a custom trailing stop. So one of them I'm going to set at 4,000 points, and the second one I'm going to set at 5,000 points. Give it a little bit more room to breathe in case of a pullback. I get a lot of questions about trailing stops in terms of how do you measure that, and it's very simple, right? If you draw out a market structure, let's move that there. Okay, so here's this market structure, right? If we measure the total market structure, the swing within that structure, we obviously don't want to have a trailing stop that gets activated because of a pullback. We can see a market's ranging, it's moving topside. So we want to account for those pullbacks. We don't want to get taken out of that trade. So when the market peaks, we want to measure in that range. When a market peaks, what is the pullback? And in this particular case, it's around about 5,000 to 6,000 points. So in that case, I would set a 6,000 point trailing stop. So in the event it continues further higher and drags my stop loss into profit, it allows for some breathing room for that market to do a pullback without taking me out prematurely. So I do think USDT is going to be a little bit choppy over the next couple minutes, but we will obviously start to see a bit of a direction over the next couple hours. Again, we've got markets that poked out to the top side and are kind of busy deciding what is going to be that next move, to whether they're going to continue top side or we're going to see some sort of pullback. So that's the reality of trading just before massive high impact news. I generally don't like it. I generally try and avoid it. But that's the reality, and it's important to see it and understand it, that as much as we can have these massively successful live sessions, we obviously need to manage risk accordingly, and it's just one of those things. Now, if you caught us in the morning for the London session, you should have banked some of those pips, and that's where I speak about making sure you have a multi-time frame and multi-asset approach. So if you have a successful morning, I'm taking my profit from the morning and I'm putting it into my New York Stock Exchange trade. So even if I'm completely wrong, I'm not net negative for the day. I might end up being neutral. And that's a great way that you can potentially look at it from your trading strategy perspective, is try and see that when we bank pips in terms of the morning, try and take a portion of that, right? So if you bank 1,000 pips, try take 600 of those pips and then place 3 trades with a 200 pip trailing stop or 200 pip stop loss. Because in that case, even if you lose all 3 of those trades, you still net positive 400 pips for the day. And that obviously is in relation to your account size. So that is why often in the afternoon, if I've had a good trading day, I'm trading completely stress-free, right? Because if I'm wrong, I'm simply taking a portion of my profit from the morning. I'm not diving into my accounts or into my equity. I'm simply just using banked or realized profits. And that's going to be part of the exponential profit multiplier strategy, which we will be teaching and bringing into the academy later on in the course of this year as we redevelop and overhaul the academy to the biggest extent. Now, a lot of people have asked about the academy. Guys, academy is going to be like something you've never seen in your lives before, going from the very basic stuff all the way to super advanced strategies and money management skills. And that's something we're very excited about, but we're taking our time to make sure that this is something that will be relevant for the whole of 2023. So you definitely want to be a part of that. And we are definitely in a range, guys. Markets have some indecision. I'm holding it. Like I've made my pips in the morning. I'm going to hold this. If she wants to reverse and go downside, I have zero problem with that, because it means we have going to have a bigger movement for the FOMC this evening. Again, my expectation is for a bull market. However, we have two key pieces of data that we have to understand is going to come out. First thing being when that interest rate number comes out. And I just want to explain this for those of you who've traded interest rate decisions in the past. When that interest rate number comes out, there's that initial shock factor, all right? The markets then digest that data. And then 30 minutes later, Papa Powell, call him Papa Powell, but Jerome Powell, he essentially then explains why they've made that decision, and they show the future. So they call it a dot chart or plot chart. And that shows, what is their goals for the balance of the year? Where do they need to get interest rates? And in most cases, majority of the market looks at that to look at, where markets will be going and what that effect will be. And a lot of the times that is what the markets react to. So regardless of what this does this afternoon, I'm going to hold it. It is what it is. FOMC is in the discussion for this evening. That's what I'm most excited about this week, and I believe that's going to set the tone for the rest of the week. So if we do it right and we get some really good trades in, good risk management, these might be trades we can hold until next week, right? We can take some profit along the way, but I'm very, very excited about it. So again, if you don't have a live account, guys, get it funded. We've already drawn a list of all the live accounts, right? We're sending emails as we speak. If you don't have a live account and you're not going to get that email, make sure you get it funded and send that to us. Darius, yes, 100%. So I'm going to message you guys directly after this, and we will schedule that live session where we can go through your personal trading journey, where you're at and where you guys need help, and you'll be able to contribute towards the shows and help improve what it is that we do. Guys, other than that, again, if you don't have a live account, get it funded. You don't want to miss this out. You're going to watch the replay at some point. Actually, you guys won't see the replay, right? It's not going to be a public broadcast. It's only going to be a link for those who have their live accounts. So if you're not going to be a part of it, you may miss out. And the whole week, we're going to be referring back to this event. So don't miss out. That's all I can say. It's going to happen. I'm saying it now. It is what it is. Guys, outside of that, I'm not too stressed about the markets this afternoon. I'm mostly looking forward to the FOMC this evening. I'm going to hold this, let it play out. We've got, on a 15 minutes, we've got two massive candles, one downside, one top side, and markets need to decide where they're going. If markets look at past data, they're going to see that an interest rate decision generally has a net positive effect. Prior to the last couple interest rate decisions, we've had a bull market. So the day leading up, interest rates have essentially tipped off long-term investors that there's going to be a bull market. So I would like and love to hold this, but if it dips and takes me out, it is what it is. I know we're going to have an absolute crack of an evening tonight. So outside of that, guys, have yourselves an amazing day. Remember to live and trade the Globex 360 way. And until a little bit later, goodbye.